It's Setup Monday here at Brave New Coin. Let's take a look at some setups and non-setups across the crypto landscape. We'll start with the BTC chart, which continues to paint potential mean reversion trade to 44K. Not just because I'm a Bitcoin lover or I want number to go up, but when I'm flipping through any chart and I see this type of structure, it says, yes, we're obviously bearish. We're below the cloud. Yes, we're obviously bearish. We have a bearish TK cross here. But we are so bearish so quickly that the more likely outcome here is an attempt at mean reversion. Hopefully we didn't already attempt and swat that down, because the easier trade here is the mean reversion to 44 to 48. Let's say this actually goes to the cloud here. That's the easy trade. And then the next easy trade after that is a short entry from 44 to 48 back to wherever at that point. Alternatively, the non-cloud people are probably just saying this is a head and shoulders, even though it's super ugly and whack. Some legacy people are looking at that. Yes, we have death crosses basically on anything you look at right now. Yes, those don't always have a good hit rate, but again, snap judgment is they're not bullish, right? You can't get bullish on death crosses. They're called death crosses for a reason. They're called golden crosses for a reason. We're below the cloud for a reason. Right? We're down 50% from the top. We have been unable to muster higher highs here. We just keep chopping around. Chop, chop, chop. So the default trend is still bearish and will remain that way until we're back above the cloud. And that may take a year. It may take 3 months. But when it happens, it's pretty obvious where the direction is at that time. Just like the direction here is pretty obvious. Default is down. That's just the end of story. But it's good to look for mean reversion trade in this case. Here's the opposite scenario of that, where you didn't even get a TK separation as great as we have now. The TK lines didn't flatten out for as long as they have now. But as opposed to complete mean reversion back to the Tenkan, it just sort of went sideways for a long time and then eventually led to continuation. So that is also a more remote possibility in the next 2 weeks, most likely. So if this can hold its lows, stay flat, there's a pretty high potential that this tries something to 44. Now, if it does one of these for 2 weeks, we'll see when we get there, right? But that would make me less optimistic, I think, overall. And none of the higher time frames are on our side either for bullishness. Here's the weekly cloud, and the support is always at the Kijun. That's the mean reversion point. Here you can see we got way above the Tenkan, way above the Kijun. We're getting the C-clamp still, even as price is below the Kijun now. But this is the tougher trade because we lost support. We're just sort of drifting into free space, but we're still above the cloud on the weekly. It's kind of the nightmare scenario because there's really no signal here other than, yeah, we're bullish, but you're kind of just expecting to drift through the cloud here like we did in 2018, like we did in 2014. You can see even here we mean reverted back to the Kijun from the downside, from the underside, but we're still, kind of basically at the Kijun on the weekly. Here's the 3-day, which is even more bearish, getting a TK cross below the cloud for the first time since early 2020. So again, default here, if I pull this chart up on anything, the default here is we're done. Like the trend is over. We're waiting for the next move. You're either waiting for, again, a bullish continuation trade. This would be probably above 50, above 48. But the expectation here is lower lows, certainly. The good news is on the low time frames, we have broken out of this invalidation, or we've broken out of this pitchfork, leading to the likelihood of invalidation here. The longer we can hold sideways, consolidate, the less likely it is that we continue to push lower and lower and lower on this time frame. You can see all this volume congestion here during this consolidation. You can see we're getting rejected at 36, which is the point of control for this specific view of price action. So above 36 we get more bullish, and above 40 we get bullish, kind of like to 50 to 48. You can see where the volumes are, at least super zoomed in, over the past couple months. So we're slowly losing bearishness as we go sideways, but we really need to get above 36. We need to get above the yearly pivot at 37, and ultimately out of this range at 40. But I think it's fair to get bullish. This is the 8-hour cloud. People are asking me why am I looking at this time frame. because the 1 hour, 2 hour, 4 hour, 6 hour are all just a mess, right? They're all just super high noise. This is pretty clean. You can see this was bullish. You can see where we flipped bearish and where we lost support. And we've been below the cloud since May. So if you want to cheat the mean reversion, if you're saying, okay, I know what this possibility is here, right, where this should play out, you can look at it on lower time frames, 4 hour, 8 hour, in this case 8 hour. It's still a bunch of noise, right? Price is gross chop. But if we can get above the cloud this week, next week, in this case it would be above 35.2, 35.5, something like that, and we start flipping support or flipping resistance into support, then you can get more and more confident. For me, that means I add size, I add leverage. I'm ready for a move. The cloud is telling me 44 here. It's telling you 44 on the Kijun here. All this stuff lines up on lower time frames. It always will, usually. So I like the trade from 35, whatever, to 44 at a minimum. But it's not really safe to get bullish on that until we're actually above that 35 level. So you can get like hopeful, but like ETH was looking pretty good over the past couple of days. It went into the 8 hour cloud. It also has this mean reversion trade, in this case to like 3K from 23. So if it can hold above 2K for the next week, then I get more optimistic. I can add size, leverage, that sort of thing. But it's still not yet there. It's looking more neutral than bearish because it's back into the cloud, but it's still not above the 8 hour, right? And on the Bollinger Bands for BTC, this measures volatility. If we're sideways, they tighten up. If we're highly volatile, they expand. You can use this for a lot of things, but I mainly use it for expectations of a move to the upside or the downside. The line on the bottom here is Bollinger Band width, and the colors here is price above or below that 20 SMA. In general, if we're above the 20 SMA for an extended period of time before the breakout, you can say with a reasonable degree of certainty that this is probably going to break up. The opposite is true. If we're below the 20 for a reasonable amount of time during that tightening, you can say we're probably going to break down. You can also say historically, we need to be at least this tight before we probably get a move. So yeah, you can move, like here we tightened up pretty good, but not as tight as previously, and we still got to move. But that entire time we were above the 20 for the most part. Here, for the most part, we're below that 20 SMA on the daily. So again, the default direction is down, but the Bollinger Bands, the cloud, the 8 hour cloud, the daily cloud, those things are going to help you sort of decipher what's going on here. While BTC mostly is sideways, ETH is kind of up a little bit. DeFi, certain things, SNX has bounced extremely well. Comp, BAL, Melon, Enzyme is kind of up and flat in a range. Aave, Uni have sort of held up. Sushi, not so much. Sushi continues to sort of underperform everything. But here's the DeFi perp, which is just a grand overview of everything that's going on. You can see we W'd out here and bounced pretty decently. But again, trend-wise, which is why I have incredible trepidation going all in on the DeFi portfolio for Enzyme. I have incredible trepidation getting back into that stuff because trend-wise, we're still below the previous range with a death cross, below the 200, below the volume. This isn't a perfect metric for each individual DeFi pair. This doesn't capture comp well enough, SNX, BAL, right? It told you there was a potential bottom. But again, the default should be down. So this is a mean reversion in action. After that, to me, until we see some strength above this 8,300 level, the default is down. Now this could paint a multi-month inverted head and shoulders. You can imagine it. This is the left shoulder head. We get back to this 10K level, get rejected again, get our right shoulder, and then into Q4, maybe something happens. I don't know, but we're well on our way towards something like that. We started to paint this falling wedge. We kind of broke down below that, parabolic, W'd out, and are just back to mean reversion. So as a whole, I think there's not a lot of strength left in DeFi, which is again why I'm a bit nervous getting into DeFi stuff in a big way. Here's Aave, which was below its pitchfork zone, if you believe in this rate of change stuff. Unlike SNX, unlike Comp and BAL, Aave did not yet retrace to its yearly open. I mean, Uni's still up 300% from its yearly open, and maybe that's justified considering the volume on Uni as a DEX relative to everything else. But stuff that has retraced to its yearly open, to me, is good enough to start buying again, because that has washed out any of the profits from January. So Aave is still more likely to pull back than retrace to all-time highs or anything like that. It's got a death cross. It's below the pitchfork. Let's say this survives. The upside would be all-time highs, because the upside is this midline at 900 plus, whatever it is, 800 plus. So the same thing with Link as well. If Link can survive this, it's very clearly out of the pitchfork. If it can survive, I like 40 to 50, which is a 2x for Aave. 900 would be certainly more than a 2x. So the reward is good. The question is, what's your stop? Is your stop just lower lows? Is your stop January open? Are you just going to long or DCA in anything lower? The 2-year or the MA multipliers, the high time frame buy zone, sell zone stuff on Link and Aave are both telling you to start DCAing in. The other part about these are they haven't really had a multi-year bear trend since pre-2020. So it's very touch and go, very wishy-washy. I think it's too early to get back into a lot of this stuff in a big way, even though it's starting to look okay and bouncy. I also want to mention Bitcoin hash rate obviously just got walloped by China. So I'd watch this. If this recovers, it looks like the Chinese miners who have exited now and are able to bring stuff back online want to do so as quickly as possible, because even though price is down 50%, mining profitability is up considerably, because, at least relative to where it was, because hash rate and difficulty are down so significantly. If it's a zero-sum game and difficulty is less, as a miner, if you could stay on this whole time, even with price declining, which is also going to affect this, you're doing pretty well. And we can look at mining profitability, which might just say I'm wrong, but in general, miners aren't as profitable as they were from February to May, but they're kind of getting there, back in the range, right? So as a miner, you kind of don't care as much if price is 50%, so long as difficulty is down significantly, which it is, right? You can see the profitability is back into this previous range. So I'd watch hash rate. If hash rate continues to decline, I think we're in for more pain. If it curls up, I think we're more bullish, mainly because of China stuff. If the Chinese miner exodus is over, great. If the Chinese purge of derivatives is over, great. That might not be the case. Something else to watch is on-chain stuff, which I always talk about, but BTC active addresses started to pick up again. Transactions slowly picking up, but still down significantly. ETH, I was a little more bullish on, because these on-chain metrics had looked like they attempted to bottom at least. So I'd continue to watch for that stuff. I'd watch funding, which is negative almost across the board on everything. This is bybt.com. Not a perfect snapshot of funding rates, but it's something to use. So funding rates still negative across the board. I'd watch grayscale premium to discount on BTC and ETH. That's a good sentiment gauge for legacy appetite of crypto stuff, even though there are unlocks coming for GBTC, and they aren't exactly hoovering up more and more BTC in the fund. So a lot of wishy-washy stuff going on. But for me, I'm just kind of glued to the 8-hour cloud for BTC on the big stuff, because if this can pull up, then it means everybody can breathe a sigh of relief, at least the 40 to 44 range, when I think the bears will be back in a big way. Lastly, I'll just mention the ETH-BTC fund and DeFi portfolio. I trade for Techemy Capital and Enzyme Finance, non-custodial portfolio management tools. You can send ETH or USDC into the smart contract, allowing me to basically copy trade that stuff. Or you can just watch to see what I'm doing. They added Yearn vaults today, which is great for the DeFi portfolio, because that means I can get into stuff like the Y vault on 1inch and SNX. I kind of avoided SNX on that drawdown. Previously, we were holding a ton of SNX, probably too much in retrospect, but we let that all go because the fund or the platform itself was having issues. It's single collateral. That's a whole separate video, but it's bounced quite handily from those lows around 5 or 6. And I've added it today because the yields are quite high, and it kind of makes me question if everyone else is doing the same thing I am. Yields on some of this stuff, BAL was bouncing between 10 to 13. These yields are high enough to the point where, okay, yeah, I'll throw some at it, right? Even if this isn't the bottom, even if it goes a little lower, these yields can help with the downside. They're not going to like save this thing completely if it drops 50%, but it makes it more attractive to hold it and sit in it. Comp's the same way, even though I kind of missed the boat on the ultimate low. It still looks good, and you're still getting not great APY, but it's something, right? And you can also see that I've been adding on the BTC and ETH side of things because I'm starting to get more optimistic that this thing's going to curl up. So anyway, that's all I have for this one. Like, dislike, comment, share, subscribe. Happy trading.